Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading futures markets using the Viper tools, you're absolutely in the right spot. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there's a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, so just catching everybody up here. So we're looking at a chart of the Russell. This happens to be, me personally, one of my go-to instruments in the morning. Here's the open right here, 6:30 a.m. Pacific time, right here at this line. Now, we were just making the point that, in the pre-market session, you were in a little bit of an uptrend, sort of like this. And then she tried to bounce here in the pre-market session. She came down, broke the mid-band, kissed, and rolled over. So arguably right at the open, you had a short trade right there. But it was pretty quick, and you probably didn't get it. Now, on the surface, you might say to yourself, well, every time you came above the mid-band, let me show the entries, it rolled over, and you pretty much had short trades. So initial short trade at the open was here. Secondary short here. Everybody sees them, right? And they're pretty obvious. Another one there, another one more or less here, and then it came up and it didn't roll here, so that was not a short. Now, these movements happen pretty darn fast. I mean, you're talking about it went out of this box down to here in the span of about a minute, and then a minute later, it rolled over a little bit, double checked down here, and then a minute later, now you're at 633, and then a minute later you're down. So like every minute to 2 minutes, you're getting these shots down. I'm not saying this is not tradable, but what I am saying is that, you had to be pretty fast and know what you're doing to trade it. And usually the first at least 5, 10, 15 minutes of most market opens, the market's pretty choppy. And you want to avoid it. You don't have to be afraid that you're going to miss the move of the day. I hear that all the time. Charles, if I have to wait 5, 10, 15 minutes, I'm a big, huge 100-tick move's going to happen. I'm going to miss the move of the day. How many of you think that's true? Let me ask a different question. How many of you used to think that was true? But now you know better, right? Now you know better. You're not going to miss the big move of the day. I can guarantee you. I can assure you, and I will show you that today. Now, there's another thing that we could do here. Let me get this chart sort of set up for you to give you an obvious answer to a question that I'm going to ask. In this pre-market session, I'm going to go back to the pre-market and the open again. What is something that we should do to this chart to prepare ourselves for trading? Okay, pretend it's tomorrow morning and you're looking at the Russell. It could be anything. Pretend you're looking at the Russell. And, you come into the room a little early, with Gary, and maybe you're looking at, maybe you got oil up or something like that, but you're looking at the Russell too. You have to draw your support and resistance lines. I do those first thing every morning. That's the first thing I do. So you can more or less put one here. You can obviously see there's another one up here in terms of resistance. That's your resistance area up there. And you got a support area down here, and well, kind of like that. And then another one kind of down here. It's secondary support, more or less in this area right here. Now, when you frame out a chart like this, and the range you're looking at, say 50, 51 up to 57, 58, 59, you're looking at basically a 70, 60, 70, arguably 80 tick range. So is this overall range tradable? Say from these inner from here to here. Is this tradable? Yeah, of course it is. Absolutely. It's well above our limit of 20 to 25 ticks. It's extremely tradable, right? So let's advance the chart so we know what happened. We get the sell-off. There's the 1, 2, 3, 4 shorts. The fourth short comes down to where? Right here. What is this area right here? Yeah, it's right in between the two support levels. This one almost hit it. This one hit it right on the button. So if you were shorting before 7 o'clock, the Russell market, when you started getting down into here, what should you have known that you wanted to do? In other words, is it clear at this point that we're getting a big sell-off downtrend with big runners? Or are we basically just sort of testing support? What do you think? What do you think is going on here? First 20 minutes of trading the Russell. We got a big runner, or is it chicken wing bone off the bone? Yeah, it's pretty bony. Not a lot of meat on that bone, is there? You're just gnawing on some gristle. It's testing support. That's exactly what it's doing. And so what you're wanting to do, since you know this is not running time, is just if you took the shorts, you want to look to cover and keep tight stops, because it's not just, if it was running, it would be tanking and ripping through support and dropping like 80 ticks, but it didn't do that. Now, I'll tell you what I'm going to do. I know this is early. We're just still getting sort of into the session here. But I'm going to tell you what. I'm going to advance this chart beyond here, and you tell me where you see the next trade. And when you do, just don't type in T, type in L for long or S for support. Short. Okay? I'm going to advance the chart, and we're going to go beyond 652, where we're at right now. We're going to go up to 7 o'clock and advance the chart and watch the rest of the morning real quick on Russell. So when you think you see a trade, if you think you see a long trade, you're going to type in an L. If you think you see a short trade, type in an S. Ready? Okay, here we go. We're going to advance beyond the short program. I'm going to go bar by bar, blow it up a little bit more so you can see it better. Don't type in an S or a long or short. I haven't started it yet. Just give me a minute. Okay. All right, so here we are at 653. $6:55 coming up on 7 a.m. Pacific time. Let me blow the chart up a little bit here. Yeah, what are we at here? Yeah, okay, we're coming right up on 7 a.m. There's 7 a.m. right there. Okay, 7 o'clock. Okay, I want to stop it right there. Now, that was a very interesting study in what everybody typed in there from the team here tonight. Some of you typed in an S for short when the market was doing something like, when the market was doing that, when it was up here. Now, I can understand why you did, because technically speaking, this is a what? Right up in here. Okay, you're coming off a downtrend, 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 downtrend. And after the downtrend, we come all the way to the opposite band. What is that trade called? Phantom. Phantom. Now, when you take a phantom, where's the target? We want to get back to where? Right, the mid-band. However, when it gets to the mid-band, you want to cover it, and most of you typed in long right here. And that was true. You can have a tight box. You can have a little bit bigger box. However you drew it, you're long. You know, one of these bars got you long off this bounce. Now, I'm going to blow this up because I want to get real detailed about it. Here's what I hear from a lot of traders. The trade comes down to where you see you want to get in, like it's doing right here. Let's talk about this retrace here in detail. 700 in 19 seconds, 700 in 24 seconds, 700 in 36 seconds, 701. 701 11 seconds, 701 in 19 seconds, 701 in 32 seconds. So between the formation of these bars and these bars all the way over to these bars, how much time did you have? Less than a minute. Would you say that you realistically had time to go into Object Trader, get your region tool all set up, and come in here and try to draw a box? Was there enough time to do that? Yes or no? In your opinion? Maybe, depending on how good you are with the tool and you're used to fast-moving markets, it is possible that you could have done it, but probably not. What would be another way to get in this trade as it is hitting the midband and bouncing? Some ideas. Other than a box. I mean, we want to use the Object Trader tool as much as we can because it's semi-automated, so it puts the targets in, puts the stops in, manages all the whole trade. So we want to try to do that as much as possible. But if you see a trade come along and you just don't have time to put a box up there, what's another way to get in? What would be another good creative way to get in? Click buy, market order, limit order. Could you have right-clicked and put a limit order in right there? Right-click, limit order, right here. It's bouncing. You see it bouncing. You clearly see the bars heading up. You hit market buy. You get in the trade. Now, how many of you, and be honest, I mean, when we first started this webinar, some of you said this, so I know it's true. How many of you hesitate on the bounce and then try to get in up here by drawing some kind of box or some kind of limit or buy order? Or you saw it bounce. Maybe it was called in the room, and you weren't sort of paying attention. You didn't have, you were looking at some gold chart, and the Russell thing came, and now it's up here, dinking around. And you're nervous because you don't want to pull the trigger way up here. You saw the trade was down here, but now you want to get in, but you're saying to yourself, oh no, this is gonna be another one thing. I'm gonna get in right here, and it's gonna slam down on my face, and then get total stopped out and get slammed. Happens to me every time. I get in late, dang it. And then a stupid thing reverses, like it knows I got in the market and it takes all my stops out. This is so frustrating. Some of you saying I'm guilty. Some of you saying this is my biggest problem. Some of you saying I used to do that. Okay, good. Well, you turn things around there, Roger. No, the box doesn't draw automatically, Michael. At the end of this webinar here, I'm going to point you to a web page where you can download some. Gary's done quite a few videos on the Object Trader tool, and he explains how the whole thing works. So I won't get sidetracked into that here tonight. But when you activate it, you can draw it and size it pretty quickly. I mean, that's why I'm saying, if you have if it's sitting here for like 2 minutes, if markets are sitting there for a couple of minutes, that's plenty of time to get a box in place. 30 seconds, under a minute, this is pretty close. Yeah, but I'll show you some videos you can watch. Now, in this case here, if you got in late at this oval, it's okay. it immediately moved in your favor, took out this swing, and then had a beautiful run. I mean, here it came all the way up to 56, came all the way to 57, and what is this area right up here? What is this area right up here? Where in the heck did that yellow line come from? What is that? That's, is that left over from some other webinar I did like 2 weeks ago? That's the top of the resistance range that we drew back in the pre-market session. Right. So if you're long from anywhere down here, what might you ought to think about be doing up here? Here, let me help you out. What do these bars do right here? They hit it, take some profit. Tighten your stops. Unload it. Unload all of it. Tighten your stops super, super duper tight. It's hitting it. It's hitting it. It's hitting it. Resistance from pre-market is holding. Now, a word about trailing stops. Trailing stops are part, most of you know this if you use trailing stops, part half sort of art, half science, okay? I want to show something here. And every instrument is a little bit different, so you just have to sort of pick your spots. Can you see how this is the stealth line, okay? This is the snaky little stealth line. When it's going up, it's green, and it remains intact. This is line 6. See the thin line right here? This is line 6. Now, what you're going to find when you have an up move like this is that line 6 and the stealth, the green stealth line, are going to more or less track the movement of the price. So you're going to get this notion of thrusting, pulling back, staying above it, thrusting, pulling back, staying above it. You get the idea. Here's a case where it wicked it. Didn't close below either one, right? You're still in the trade, You're hitting resistance. If you're in multiples, you're peeling off some up here. And then notice how on this bar right here, it closes below the stealth right at line 6. So you've been out on probably that bar. Either one of these two bars you would have stopped out. Definitely on your trail stop. No question about it. Now, how much money did this trade make? Now, I'm going to talk about several different ways to approach this trade. And you can do however you want. I'm going to do it like this. Here's how I'm going to approach this. Let's say hypothetically you're filled on the close of this bar right here, long. Let's put a number in here and talk about this in detail. 53 even. Let's just use it, get into ticks and everything. Let's just put 1553. There. Okay. Within a tick or two, depending on the slippage, you're filled long right here. This did not happen. Take that away. Now, one way that we teach to do this is that you can pull a 10-tick, what we call scalp trade off, when it pops out from your entry and comes up close to resistance. In this case, that would have been somewhere up around 54, which is right up here. Looks like it's right about here, somewhere right in here. It's 54. Oops, wrong line. Sorry about that. Here's your 54. So if you're in the live room and you hear a comment like, go ahead and peel your scalpy off, that's what we're referring to. We're saying that if you had put 2 contracts on and your goal is to get anywhere, depending on the instrument you trade, 6 to 8 to 10 ticks on a scalper, in other words, you peel one contract off here at 1554, that's what we're talking about. We're saying peel off your scalper at the 10-tick mark. All right, so now you've locked down, and let's just hypothetically it was one contract, so now you're up $50. And what do you do with your trail stop? Let's say you put 2 lot on. Your initial stop was down here, say 12 ticks, so you had two lot on the stop. Peel one here, you got one left, and now you start the trail, just like I showed. Start to trail. You trail, trail it on up, and then when you close up here, you get out at 56.70. So this is your exit on the long trade, 1556.7. That's the final exit no matter how many you had on. Now let's call that approach number 1. Approach number 2 would be the same entry, exactly the same entry. However, instead of pulling one off at 10 ticks, you let the 2 run all the way. And as the first contract is hitting resistance, which you knew ahead of time, we drew that in the pre-market session. We knew this was resistance and it came right to it. You peel one off here, and you're still trailing the stop on the final one. So in actuality, you're trailing stop on 2, trailing stop on 2, trailing stop on 2, trailing stop on 2. Maybe that got you, it almost got you, but it didn't close. You're hitting resistance, you take one off, you let that run, you're down to 1, and the remaining contract stops out right here. That's approach number 2. So let's look at the results of the 2 approaches. Let's see how much this runner turned out to be. So 53 to 3660 is what, 36 ticks? Well, so I'm going to do it this way. Here's probably the best way to explain it. So this leg, I'm going to call this the runner leg, since it ran and caught the trail stop, was 36 ticks. Okay, the runner leg was 36 ticks. Now, if you went from 53 and let's say you got out at 57.75, now the leg 1, we'll call it runner leg 1, which you sold at resistance where you clearly knew where it was, we'll call that runner leg 1, was actually closer to 45 ticks. Uh, 45 ticks. Oops. And then, of course, we see that the scalper trade was 10 ticks. So approach 1, if you recall what we discussed here on the approach to this trade, this long trade on the Russell, which started right around 7 a.m. Pacific time here. Approach A, let's just call it the first one, approach A. It had the scalp, right? Approach A had the scalp in there, so that's 10 ticks. And it had the runner, which stopped out over here at 1556.70, which was 36 ticks. Everybody following me here on this trade? Approach B, on the other hand, had 2 runners. Which had runner leg 1 for 45 ticks and runner leg B, or 2, $36 ticks. So how much was approach B worth in terms of dollars? Anybody? How much was approach B worth in terms of dollars? Well, that's a total of 81 ticks. 81 ticks. Why is this doing to me? Why is this doing this to me? Let's do it this way. Oops. That's doing all manner of things to mess me up here. I want to get through this quickly and just get the total. How much is 81 ticks worth? times $5 a tick equals about $405 roughly. So $400, let's call it. Just use a round number. 405. Approach A, on the other hand, was worth how much? Well, let's do some quick math. I'm going to put a line under here. Total was 46 ticks, which times $5 a tick equals $230, roughly. Yeah, 230, right? All right, let me just put this up here now. Ooh, put a little framer on it. That's kind of cool. I don't know why did it do that. Huh, that's pretty cool. Yeah, 230 on the second one. So the first one, the first one in this trade here is you got the scalp off, you peeled off the 10. That's like we traditionally teach how to trade it. And then you had a runner that stopped out here on the trail for 36. Approach 2, you essentially had 2 runners. So you didn't take the scalp at the 10. You let this come all the way to resistance, peel off 1, and then you still had 1 remaining with a trail stop that got out at the 36. So you made about double. So the tale of the story here is you're going to have to take your chosen instrument, and they're all different. I'm not kidding. I'm not kidding. They're all a little bit different. YM is certainly a lot different than the Russell, and NASDAQ is very different. ES is different. We're going to look at ES here in a minute. Crude obviously is different than gold. So, whether you do the scalp approach and get the runner, or you let 2 runners, or you know where resistance is, you have a pretty good feeling when you get into the trade. Let's scrunch this up here. You might go up and get that top. Because you knew ahead where it was, right? You already knew way ahead of time. You knew where it was, way from over here. Now, let's suppose that you made, I don't know, some, maybe you didn't do A, maybe you didn't B, you caught a chunk of it and you got like $350, $400 less commission. How many of you would stop trading? Yes or no? We call that a one and done. How many for you, if you made $400 on one trade at 7 o'clock on the Russell, would be finished? No more trading. Done. Done for the morning. I see a lot of you. Some of you saying no. Well, maybe, if you have bigger, trading goals, if you want to get $1,000 or more, you can certainly keep going or lessen your risk. Paul's saying with approach B, I would definitely be done. No, I hit my target in the first thrust and shut down. Okay, good, Toby. Roger's done. A lot of people are done. So this is a follow-on question to this topic. How many trades do you want to take in a typical day? Anybody know the answer to that? How many trades do you want to take in a typical day? Pretty straightforward question. How many? Just type in a number. How many trades are you going to take in a typical day? Brian got it right. Some of you got it right. Toby got it right. Half a dozen good ones. 5 or 2 I hit my goal. I've got some 4s coming in from John and David. Paul says 5. Toby says till I hit my goal. Chuck says 1. Good. Now the right answer is as few as possible to get your goal. Right? We've said that a million times. If you come to my webinar, you've heard that 100 times, maybe more than 100 times. As little as possible to get your goal. That's what you want to do. In this case here, it was 1 trade. Tell you what I'm going to do. I don't know if I wanted to show some other instruments here. How many of you want to see? Let's get off of Russell. Let's go to something else. How many of you want to see ES? Anybody want to see ES? I know there's a few people that trade it, and some of you are interested in looking at it. By the way, you can use YM as a proxy. You know, if you put all the equity charts right next to each other, they all trade very similarly. Some of the swings go a little further, like NASDAQ. Some go a little less. But, you know, if you're tracking YM, you know, ES is going to be pretty close with a little less movement, obviously. All right, I'm going to show ES at the open, and you tell me what you want to do. You ready? Okay, I'm going to put the open on the chart. 630 is right about here. Now it's a little bit contrast. Oh, you trade it? Quite a few. Some people trade it in here. Okay, cool. No problem. All right, good deal. All right, let me get 630 on here. What do we want to do on this chart before we get started? I know I sound like a broken record. It's all right. Repetition is the key to success, right? If you're going to learn anything, you got to see it a lot of times. Put your support and resistance lines. Perfect. Excellent. So we're going to do that. You can pretty clearly see that there's some pretty good resistance right up in this area right here. Yep. Hit it 3 times. Where would you say support is? Yep. I'd say pretty much kind of down right in this area right there. Hey, listen, another word, you know, support and resistance are areas. Okay, I wouldn't sit there for 15 minutes hyper analyzing a chart. I mean, you just look for where some swings are. Like down here, you know, I don't think I'd put it here. I wouldn't put it up here. I just sort of say this area is support. Anywhere down in here is support. Okay, and then up here, now this one's cleaner. Every time it came right to that button right there, she pulled back. So what do we know? What do we know right now just by doing this? Well, I'll help you out. As long as we stay within the confines of this range, we are said to be range bound, and that if we are shorting the market and it gets anywhere down in this area right here, we're probably going to want to start looking to cover. Yes? Just like we did with Russell. Same thing, right? Right? Is that correct? Yes, that is correct. You are correct, sir. And if the market gets anywhere up in this area right here, and we're long, what might we think about doing? Taking some profits, yes. Tightening your stops, yes. Absolutely. All right, now I'm going to advance the chart. I'm going to go up to 7 o'clock or thereabouts. I'm going to pause, and then I'm going to run it forward. So it's going to be very similar exercise as the Russell, only this is ES. This is the E-mini S&P 1250 a contract. So from a risk-return point of view, it's roughly twice the value of the Russell at $5 a tick. So, you know, what I mean by risk-return is, you know, you put 2 lot on here. Now, the difference is when you see these movements, you know, if you get say you get a 30-tick move in the Russell or 40 or 50-tick move in the Russell or YM, this is probably going to be about half to a third of it. So it's all in the same context. Now let's advance it. And I'll get your opinion on what you think is happening. 6:34, so I'm going to go through the first, say, 20 minutes. Okay, now we're at 6:45. Now I'm going to pause it right here, and I'm going to ask you a question. Yeah, it's ranging. Now let's contrast that with the Russell. Everybody remember what happened in the first 25 minutes of the Russell? It sold off, but it was extremely spiky getting those shorts, remember? It's like bip down, boom, right in your face. Bip down, boom, right in your face. Very difficult to catch. Now, if I ask you a question here at 6:50, going into 7 o'clock, normally a lot of movements happen at 7 a.m., just to let you know, especially if you have news. If there's some kind of news at 7, you can pretty much expect some movement. You know, if it's in a range, it's probably going to break out. You could get V bottoms, V tops. 7 o'clock is, up to 7 o'clock, I'm sort of warming up. Let me just put it that way. Just sort of getting warmed up, because I know that after 7, right around that 7 o'clock mark, something's going to happen. The algos are going to kick in, markets are going to start moving, they're going to figure out their direction, up or down, and then the movement starts. Now, when you look at this chart in its current condition, if it was to go a direction or the other, would you say you're favoring the long side? Type it in L. Or you're favoring the short side in its current condition going into 7 a.m. L for long, you're favoring a long. S for short, favoring a short. Just type in what your thoughts are, looking at the current chart, the way it looks right now. Say tomorrow morning you're looking at an ES chart and it looks just like this. What are you thinking? L for long, S for short. In other words, it's clearly in a range, right? So which way do you think it's going to go? Based on what you see here. Oh, interesting. Interesting feedback from the team here tonight. This is extremely interesting. All right, let me tell everybody what's going on here. So quite a few of you. All right, let me just let everybody know what we're looking at here. So quite a few of you are favoring up or long. So you're thinking it's going to go that way. Some of you, like Jim, Paul, Dennis, John, doesn't matter what I think. Well, Joel, there's a reason I'm asking this question, and I'll explain it in 1 second. Just give me a second here. Some of you are saying it could go both ways. In other words, she could pop out of this range around the midband and go up here and check this, or she could break down and at least go down and check that. Now, here's why it matters what you think. Because what color is this background? And what did it do just before it went into this sideways funky sideways thing? What direction was the market going before it started doing this? And what color is the background? See, these are all little clues that the market gives you, that you have to sort of attune yourself into the market. You just can't willy-nilly say, well, yeah, I don't know. Could go up, could go down, I don't know. Whatever. Whenever it gets there, I'll figure it out. No, there's clues here. What is this in relation to this? This in relation to this. It's a pullback. It's a retracement. The trend is still technically up. Yes, it's sideways to up, and the background is still green. So if you asked me this question, I would say up. I would be favoring the upside. Although I might go ahead and put a limit order sell down here just in case it broke and at least got down to there. But I'd definitely be favoring the upside. Could you put a box around this? It's pretty big. But the answer is yes. And let it break either way. Or you could use limit orders. Okay, so here's how I'm going to approach it. Here's how I'm going to approach this. I'm going to approach it this way. If you used region box, and it did sit there for 20 minutes, so you can't say that you didn't have enough time. There's plenty of time to draw a box here, no doubt about it. At 46 to 49 times 312. Yeah, you're right at the top end of acceptability for the size of this box. This box, depending on how you draw, it's right around like 12 to 14 ticks. That's sort of the biggest box you want. Otherwise, you're getting into more like a breakout trade, right? So just to be clear, for those of you, I see some people came in late. Don't worry, we recorded this, and we're going to put it on the web tomorrow for everybody. Could put a limit order here too if you didn't put a box. If you came in late or you didn't have time, you're looking to get in, and your sell order limits to be under here. So you're getting long above here. Oops. Just to be clear with everybody, we're getting long above here, and we're getting short below here. And we see where resistance is. We already had it drawn in there. That's why those lines in the pre-market support and resistance are just so critical. They're the first thing I do every morning, literally. As soon as I look at a chart, whatever I'm trading that morning, I put my support and resistance line on first. And Gary usually does them in the room, too. So if you're in the room, you want to sort of have him confirm where he's putting lines. Your lines should be pretty close to where his are. This isn't really technically lower highs, John. I don't know about that. It looks, and ES is really notorious for this. When it comes to these levels, you'll see it be pretty clean. See up here? See how it came up? This is algos running. Okay, algos know where that swing is. Okay, the buyer's coming up. Short sellers step in, push it down. Support level, they start covering, pushes it up, back up. They hit it almost on the button. Sell programs, profit taking comes in, back down, support. Okay, so here we're positioned to take a trade on ES, either way. Or you could just have the long side on if you believe that long is all you wanted. Here we go. All right, bam. Now you're long. Probably on the close of one of these bars. This bar or quite possibly even this bar, depending on exactly where you had your limit order and or the top of your box. Gary does put, it really depends on the chart. He puts more micro lines as opposed to the larger view. You can do that. I mean, it's a personal preference. The whole reason for the lines is to help you see support and resistance and to know what you're going to do when the market gets there. That's the whole reason we do it, right? So if you prefer tighter lines, you know, sort of micro support, use those. If you prefer the bigger picture lines that go back, then you can certainly do that too. Personal judgment call based on your instrument. Okay, you ready? So we're long. We're long out of that. We're long out of that box, or the limit order is filled right there, just under 26.50. So it pops up, pulls back a little bit. Now I'm going to address something here, and I want you to be honest with me. Let's say you get filled long on the close of this bar, somewhere in here, and it goes up, but it doesn't quite get to resistance, and then all of a sudden, you know, tell me if this drives you nuts. It starts pulling right back almost to where you get in. Does that drive you nuts? Sometimes it'll come a little lower. Like it'll go all the way down into here. So you were up maybe, I don't know, 8 ticks, maybe more, 9 ticks. You're swimming with the fishes. It comes right back and it checks where you get in, kisses it. You're like, why didn't I just take that profit? I hate this. Yes, and then I stop out, Eddie. Look, you got to be able to give the market some wiggle room. Okay, you can't be so tight on your stops that when the market gets ready. Now look what this trade turned into. If you stopped out, it didn't even come back to where you got filled. You're still good here. It's just checking line 6 in the stealth line. That's all. Even if you took, let's say hypothetically, you already got a scalp. Okay, let's see if you would have got a scalp. Let's do some quick math here. So how far did this poke up go? All right, you're filled at, I don't know, even number 50. And it went to 53, 12. Well, no, it went a little higher. That's actually 14 ticks. So technically, you did get a stop out. I mean, a scalp. You got at least 10 ticks out of that. Went 14 ticks. So even if a little slippage, you still got your scalpy off. Now you got to remember, okay, your initial stops. If you have 2 on, your initial stops are located 12 ticks below here. So that's down somewhere down here. Now, if you took your second contract stop and moved it, say, within 3 ticks of your entry, you know, you'd still make a profit, 10, 12 tick scalp, 3 tick loss. That's what you want to do. But you wouldn't take it all the way up here. I mean, I suppose you could take it to line 6 in stealth. That'd be slightly above your entry. But everybody see what I'm talking about? Now, let's look what happens with this trade. It takes this resistance level out, blows right through it, but boom. But bam. All right. Quick question. Make sure everybody's still awake. At this stage of your trade, where is your trail stop? At this stage of the trade, where is the trail stop located? The long trail stop on one contract or whatever you got left on. Where's your trail stop? I'll give you a hint. There's a couple indicators on this chart that help you find it, right? Good. I see numbers coming in. Stealth. Okay, line 6. Good. Right in this area right here. Yep. You said anywhere in there. You were right. So here's your trail. Here's your trail. Your trail coming up. Trail coming up. Right in that area right there. Perfect. Most of you got that. Most excellent. Yeah, I mean, it's kind of a combination of stealth and line 6. They normally are very close to each other. I mean, they're usually within a tick or two of each other. So here we come up. We peak. We peak. We peak. We stop out. Got our stops right here. Excuse me. In our scenario here, at 12.50 a tick, let's say the first scalp was 10 ticks. That's $125. And then the second runner leg went from 50 to 56.50. 6 times 4 is 24. 26 ticks. What's 26 times 12 and a half? Anybody? 26 times 12 and a half? I can get my calculator. I used to be able to do that in my head when I was younger. Get older, all those brain cells are dying. 325. So this short leg here is $1.25 roughly. It's a scalpy, and then this runner is 3 1/4. So the total is 450. What is 450? Pretty close to what the other trade made, right? The Russell. Remember the Russell trade? How much did the Russell trade make? We just looked at it like 10 minutes ago. Anybody remember? 405. That's right. But this one only moved. Like 26 ticks. So see, you're always going to find it roughly in that proportion. If you trade ES, the tick value is more than double the $5 instruments at 12.50 a tick. However, the movement is going to be about 2/3 to a half. So you got to sort of think of it that way. Either way, it's a $450 trade, less commission. This could be one and done for you. If you had a modest goal of $400 or $500 a day, you're done. One pop on ES and you're done. And you were only in the trade here for, 15 minutes. You got filled here just before 7. You stopped out here on the runner at 17. You're in it like less than 20 minutes. Now, okay, well, one last quiz. We're almost out of time. You ready? I'm going to advance this chart. I'm going to help you out. It's going to be a long trade setup, but you type in a T when you think ES is ready to take the next long trade. Ready? Here we go. Last quiz of the day. Advancing the chart. Okay, we stopped out of the long. Okay, it's pulling back. Remember, you're typing in a T where you think a trade setup is happening. You know what? This thing is just getting in the way now. We know that was resistance. Okay, there we go. Get that thing out of the way. Okay, now you're at 722. Blow the chart up a little bit more. Remember, you're typing in a T when you think the long trade is setting up. Remember? 722. Okay. 724. Sitting there for a couple minutes. See how slow ES is compared to the other instruments? Some of you might want to take a look at it and see if you can warm up to it. Trade it in Sim for a while and see if it gets toasty for you. Okay. All right, I'm going to stop it right there. Some of you typed in very aggressively T's when the market was doing this. Now, I would say that would be aggressive. On the other hand, I would say that this box right here, or limit orders, would be right on the money because you had plenty of bars at the mid band. So what I'm saying is if you had an extremely tight box with those two, which you might have got it, but that's pretty aggressive, you'd be filled on this bar right here. With the other box, you'd be filled on the close of this bar right here. Let's see what this does. Comes up, checks resistance, pulls back. This might have stopped you out. You could have got back in. So you get the pop, retracement, another pop. So there's your pop. Takes out that top. Trail stop probably got taken out there. Could have reboxed it, got back in. Perhaps in here. And then you had another run up like that. All right. Good. By now you're over here at 8:30, so we're closing the room by then. Should be done by 8:30. So yeah, ES 1, 2, 3 beautiful long trades. Run, pop. Maybe you got 15 on that one. Maybe you got 15 on that one. You got 10 and 26, 36 over here. 15 times 2, 30. Overall, maybe 60, 65 ticks. Doesn't sound like much. That's a $700 morning. Take a look at ES. Give it a shot. Some days are choppier than others. If you're struggling with the other equities in the room, if you looked at Russell, I really like the Russell a lot. I trade ES. So for instance, when we're in the live room and you hear a comment like all the equities are heading up, there's cases where I'm long the equities across the board. What I mean by that is I'm long ES, I'm long NASDAQ, I'm long YM, and I'm long the Russell. I'll have all four of them long or short, depending on what they're doing. So I have all those charts up. I wouldn't suggest you do that. That's a lot of charts to track. We just talked about simplicity, so you should really try to keep it to one or two. Unless you've got the experience and you've got some big profit goals and you know what you're doing, yeah, obviously put more charts up if you want. I'm going to go ahead and stop the recorder. Thanks for sticking around, everybody. Who was asking about